Okay, we're back. Outsiders, people who aren't from around here, they tend to think the Las Vegas economy has always been about gambling and tourism, and to be sure, about 1 in 3 jobs in Clark County is directly, in one way or another, connected to the hospitality sector, either in food or hotels or the retail stores. But of course, the industry truly driving the area's growth back when Las Vegas was growing really, really hard, that was, well, the growth industry. And the problem when growth itself is a primary industry is that when it stops, the economy doesn't just level off, it plummets in an uncontrollable spiral of misery and despair, as we all now know. In 2006, about 122,000 people were employed in construction in Clark County. Now it's less than 40,000. So as we look at where the Las Vegas economy is now and wonder what the future holds, are we all just waiting for the construction industry to come back? Is that pretty much what economics in Nevada means? John Restrepo of RCG Economics is a longtime student of Southern Nevada's economy, including and especially its real estate variations. And since he knows a lot more about this stuff than we do, we asked him on the show today. Welcome back to the program.
Thank you, guys. Appreciate it.
You know, when you start looking at some of the structural numbers of who is employed where in Las Vegas and what has driven growth in the past, I mean, that is my question. Are we basically just in a situation where we have to wait for the housing to come back, for the economy to do anything meaningful?
But it's a little more complicated than that, but you make a good point, Hugh. I mean, if you look at the last 20 or 30 years of shares of employment by industry, gaming or lodging hospitality still represents about a third. So we still have not been very, very diversified at all in the process. And so we just went through a very, very traumatic period of time. It's just going to take a long time to fix it.
Well, that period is actually exemplified in this chart that we've got. This is from a report that I believe your outfit put out or helped put out last year. And what this shows, viewers at home, it might be difficult to see, but you can see there in around 2006, that big spike in the gray line, that is about 78,000 jobs that were added to the Clark County economy. Just a few years later in 2009, we lost about 80,000 jobs. That is a tremendous swing. And then if you look at the yellow lines off to the right there, that is projected job growth in Clark County. These are projections going out to about 2021. And you can see it's positive, but Mr. Restrepo, it's not particularly enthusiastic. It's not particularly aggressive.
It's not exciting?
Yeah. What explains this kind of rational lack of exuberism?
Because we've had 2 recessions, or one is a Great Recession, one is a Great Depression. It occurred in the modern time. It was driven by financial crisis. The first one was the Great Depression. This was the Great Recession. It was not your father's recession this time around. And because of that, the fall was longer and deeper, and the recovery is going to be much slower and more moderate in terms of job growth and those sorts of things. It's the nature of this recession.
Is that actually a good thing, that the growth will be more moderate, perhaps more steady, so we won't see that huge upward spike, but hopefully may also avoid a big downward drop?
It's a more sustainable glide path now. It's just that you don't try and get this kind of glide path by having this kind of depth of a recession to get there. You know, the medicine was pretty severe. But it is a more sustainable glide path. The challenge we still face is we still have essentially an undiversified economy, if that's such a word. And until we fix that, and that's an issue of investing in education, attracting different companies here, and all those sorts of things we're trying to do now, we're going to be subject to these kind of spikes because of the nature of our economy.
I'm so glad you brought up diversity. I want to dig in now to some of the recent numbers. We were looking, Hugh and I, before the show today, at the different sectors and the gains that we've seen over the past year. So we're going to throw that up on the screen now for the viewer. So education and health services has actually grown by a faster percentage. There's been a 3.7% gain there. Trade, transportation, utilities, a 2.3% gain. Construction at the same level, up about 2.3%, and then government employment up by about 2%. Is that diversified enough, or is there a new category coming soon to a state near us?
No. And the problem is, while the percent growth rates are reasonable there, you're still competing against a gaming industry that may not grow at as high of a percent because the base is bigger, but in terms of the volumes of jobs produced, it's a much greater industry. Again, we're still a third of our economy is driven by the resort industry.
And we also have some sectors that, compared to national averages, are quite underrepresented,
That's
right,
correct.
in these numbers. And some of
Healthcare
those,
is one of those.
Healthcare, really?
Healthcare is one of those.
And that's good paying jobs. I mean,
Correct.
healthcare is good wages, benefits. These are the things we miss out by not having diversification.
Well, yeah, and one of the challenges, we just recently finished a study for a College of Southern Nevada. It was very telling, the study that we did for them, a survey. And in doing that survey, we're talking to the folks at the school, and they said, listen, there's all kinds of open spaces in our engineering technology programs at CSN, whether it's medical care or tech and these other jobs where we need people. And these are jobs that are paying $80,000 to $100,000 a year to start, 2-year associate's degrees. And I said, great.
And is there demand for those jobs?
There's a huge demand for the job, and they're unfilled, those positions, and those classes are half empty. And the reason being that the kids can't qualify because of poor math skills in high school to pass the test to get into the programs.
Interesting.
All right, our collective walkabout on the economy in Southern Nevada will continue when we come back right after this.
Welcome back to the agenda. We're discussing the Nevada economy and related issues with John Restrepo of RGG Economics. He's a bit of a guru, numbers guru here in the state. I was interested in something you said at the end of the prior segment about how, on the one hand, it's rather promising that CSN does have some tech programs, and if a Nevada student were to make it through such a program with a certification, we'd be talking about an $80,000, $90,000, $100,000 a year
Correct.
job. But the problem is that there's a math and science deficit in general with Nevada students, such that they can't necessarily even get into these programs that might be desirable and for which there is a demand. But isn't an education fix a long-term problem? Aren't we 4 to 6 to 8 to 10 years away from getting that fixed in Nevada education, even if we go at it full bore right now?
That's correct. So it's going to take time. And so the question is that we're doing the things we need to do today to account for this time. There's not going to be any quick fixes. We understand that now. It's going to just take a long time to get out of this mess and fix our problems that have been endemic for many, many years. The recession, all it did, it just brought them to the forefront. The growth kind of, as Hugh alluded to earlier, growth just ignored a lot of things in many ways. When you're growing, you're not paying attention to what some of the underlying fundamental issues, your challenges. Now we're facing them. It's going to take some time to deal with them. But yeah, the math issue is a major problem.
Well, and this goes back, though, to my initial question. As you point out, when the growth was booming, nobody really wanted to pay very much attention to these issues. Nobody wanted to pay much attention to diversification because everybody was making money. Everybody had a real estate license or whatever. They're all making money. Now we've had this rebound in housing prices, maybe even some would say a bubble in housing prices that have returned to Southern Nevada. You can almost feel it in the air. People thinking, yeah, it's going to come back. Everything's the construction. It's all we're going to get the boom back. The same old thing again. Not really caring about diversification and such. First of all, what do you make of the spike in houses? Do you think it's sustainable, the spike in housing pricing?
No. I mean, there's a lot of hyperbole surrounding the prices. You're starting to see it in the headlines in the papers. You can also see it on TV. The frequency on internet loan ads on TV is always another sign that things are getting weird. Yeah, I mean, I think there's going to be a correction. It's not going to be a downturn, but you cannot sustain housing prices at 30% increase in value. So it's just sustainable. So it'll moderate at some point as lending standards continue to get tougher, and they will. Interest rates go up a bit, and the investors start leaving the market as the price of housing gets too high to make any sense for those cash buyer investors. The challenge we face, and you touched on earlier too, again, Hugh, is we still have a middle class which is wage constrained. Wages for the middle class, this is not unique to the Southern Nevada, have been, after adjusting for inflation, are essentially flat.
But it is exacerbated, I would argue, in Southern Nevada because of the structure of where people work, because of the industries, as we mentioned earlier, where you've got 1/3 of them in hospitality. Now, in Nevada, because thanks to organized labor, those wages are higher than they might be, but still that is an industry where wages tend to be smaller.
Well, not only that, but the other interesting thing, and I don't know if this is unique to the gaming industry, it may be common in other industries, you guys can speak to this. You have the largest industry in the state, the third of the economy of Southern Nevada, does not even require a high school degree to get a job.
Right.
Okay. Now, not even a minimum high school degree at the Clark County School District, that's not, you don't have to be a rocket scientist to get a high school degree at the Clark County School District.
And that goes back to the boom mentality, too. Where you always heard people say, oh, I'm going to go park cars.
Yeah, and where are the unions in pushing that? Or where is the gaming industry in pushing that? So we have this growing class of we've always had a large class of relatively uneducated folks in this
country. Well, they don't care, do they? I mean, neither the unions nor the casinos really care, right? I mean, if they've got people waiting in line to take those jobs, and if they meet the minimum standards, I mean, really, really, why should they care about education or about any other sector in the state? It doesn't affect them.
No, that's right.
Well, I think now we might be getting to a nut of a really big problem. I mean, in terms of the way that the state budget is structured, in terms of the tax structure, in terms of the commitment to higher education and research funding and such, is if you've got the people who are the most powerful industries in the state and the most influential folks in the state who really don't care about the education system, it's no wonder the teachers are out there with a margins tax initiative. They probably feel they're forced to.
Well, yeah, I mean, it caused a ripple effect throughout the whole economy, a ripple effect. Now, whether the margins tax, we can debate whether that's a good tax or not, or is a bad tax, that's another issue. But yeah, it causes these kind of tax initiatives to come forward. We have to figure out what we want to do as adults, as this community becomes a more mature adult community. The toga party's over. Okay, right? So we just got to figure out what we want to do when we grow up now.
Great last words there. Thank you so much, Mr. Restrepo. We appreciate you having you on the show today. We'll have you back.
Thank you.
All right, coming up next on the agenda, we're finally on Facebook. The agenda, that is, and we're doing an unofficial membership drive, so grab your pens or your iPads and get ready to jot down the info.